Hello everyone, today is Friday, October 16th, 2020. My name is Evan. Welcome back to our weekly stock market analysis video. If you're brand new to these videos, welcome. Thank you for tuning in. We break our analysis up into two parts. In part one, we're going to review everything that happened this week in markets. We're going to look at volatility, market internals, sectors, performance, and really sort of pick apart everything that stands out and looks interesting. And then in part two of this video, we're going to jump into the charts. We're going to put everything from part one into context, look at some longer term trends, and try and figure out how to best position ourselves looking ahead. So hopefully that sounds good to you. Let's dive into the headlines from this week. A couple of the takeaways here. Earnings season officially kicks off. We had primarily bank financial earnings that usually start out our earnings season. So we get some results in. We'll look at some of those charts later in this video. We got some relatively indecisive weekly candles across the board for equities. There were some good parts, there were some not so good parts. We're going to take a look at all of that. And we also got the bond market kind of broadly trying to rally just a little bit. They suffered two big or meaningful down weeks and now trying to recover just a bit. So we're going to jump into all of this and some more. Before we do, let's get into just the straight performance here for equity markets. You can see on the week, it was a pretty mixed session here. The Dow Jones just eking out positive gains. Same thing for the S&P 500, really just basically flat. And the Russell 2000 just happens to tip into the negative side. It was only the Nasdaq 100 up 1%, gave back a decent amount on Friday as well, but still managed to outperform and close the week up 1%. And if you look abroad, world stocks minus the US didn't fare so hot there, minus 1% on the week. So again, kind of a weak or mixed showing, so to speak. But if we look at market internals, we have some good and some mixed. So the good is the 52-week highs. This is still a positive, fairly strong number, 465 net 52-week highs in aggregate this week. That's pretty constructive. I mean, it is a good sign to see that many companies, individual stocks hitting and trading at new 52-week highs. The actual AD line on the week here was negative, so that means as a whole, we saw more stocks sort of decline this week than rise. If we look at the 52-week highs in this format here, this is what I think the bulls can continue to hang their hat on. And quite frankly, I would say it is very difficult to be intermediate term or long-term bearish on this market so long as this chart is heading up and to the right. So as long as the number of stocks that are hitting 52-week highs continues to accelerate, continues to trend up, it is just going to be hard. We can obviously have short-term pullbacks, 2 to 5%. That's all sort of table stakes, but to say that we're going to see some big, deep correction at this point, this has to start to turn over. And it obviously can start at any point. Next week, we could start to see a big drop-off here, but until and if that happens, the point is it is really tough to sort of fight this market for a sustained amount of time period. So this here, again, pretty bullish there to see that continuing to hold intact and rise. If we look at sector performance, it was a mixed picture this week. So it was pretty split down the middle here. We had industrials, utilities, communication services at the top of the list, almost 1% to the upside. On the downside, we've got real estate, we've got energy and financials. Those were the laggards on the week from 1 to 2.25%. I also want to bring our attention to this middle column. This is just the 1 month. Let's go back. This is the 1 month returns, and look at utilities here, 10% over the past 1 month here. So we've been talking about utilities in the past couple of videos here. This continues to work, continues to be a pocket of strength, and we just basically still see that this week at the top of the relative strength list. Now, if we move our attention to volatility, I think it's a pretty interesting kind of term structure we have here for the VIX. So remember, we're looking at the VIX here. So this is basically, measuring S&P 500 put call contracts and size and volume. And we're looking across the whole structure of volatility. So the front month, the 3 month, the 6 month, the 1 year, and the blue line is this week. The orange line is last week's reading. You can see this week we basically jumped up in the front month, so more kind of fear or protection being sort of placed here in the immediate term. And also notice that the 3 month, it also did rise, but certainly not by that same magnitude. So again, what this is suggesting here, which should make good amount of sense here, is that we have some near-term catalyst event worry for the market. That is, of course, the elections. And you can see that we're getting really flat here in this curve. Remember, a normal kind of healthy, quote-unquote healthy vol structure here is just this, it starts, I don't have a good draw tool, otherwise I would draw something, but it would start down here and then just kind of gradually slope higher here. And mostly because, something 1 year out is very uncertain. It's hard to price what's going on out here. So we just get this gradual rise. You can see this blue line, which is this week. I mean, we almost have this flat horizontal line. So, from a historical perspective, I mean, we're not inverted at this point. We're not in backwardation, but you clearly are seeing the interesting sort of dynamics we have at play right now with earnings rolling right into elections. So that's what we're looking at there in terms of VIX. If we look at interest rates, credit market this week, we saw yields pretty much fall right across the board. Bond prices rising. If we look at our corporate bonds here, it's kind of a mixed picture. Nothing really to take away here. LQD, JNK up slightly, down slightly. So not going to read too much into that. If we look at dollar and commodities, we saw the dollar index rising. Looking at the UUP ETF anyway, that rose on the week. Gold, silver, ag, commodities pretty broadly across the board fell. You could see crude oil kind of stabilizing here. Rising dollar, putting pressure on some of these commodity plays, which is historically kind of what you'd see there as well. No big standouts here. Silver down 4%, so notable. Not changing too much the structure of what it looks like. So put it all into context here. Report card for this week is a B. We've got, again, kind of these mixed signals here. It's a lot of indecisive kind of trading in this 5-day look back period, so to speak. We did see net positive equity market performance. Market breadth is definitely a check mark there. Risk sectors, though, not really seeing the sector kind of lineup that you would ideally see in a nice healthy uptrend. So you get penalized there, and for volatility. So we got that B for this week. If we finalize here with the way we are positioned here with our Merlin trading system, really not a whole lot of change. Basically kind of trimmed around the edges here. We had a couple of stop outs this week and a couple of profit targets hit. No real big changes to the allocation here in the pie. It's basically still kind of tech heavy, biotech heavy. We've got some gold miners in there, got a little bit of finance. So it's still very concentrated on the tech side. And really no cash to be seen at this point in time. So with that, we're going to jump into part 2 here in just a moment. All right, we're back here. We've got TC 2000 open. This is our equity market grid. Got the S&P in the top left, Nasdaq top right, Russell bottom left, and international. So international world minus the United States in the bottom right. We are looking at price is the white dashed lines on each of these charts. And the color dots are a custom smart trend filter indicator that we've developed. You can learn more about it. You can download it. You can get it on your platform with the link that is showing up in the top right of your screen. So this is a weekly time frame across the board. There was no changes here in terms of our outlook and our trend model here. We've got bullish trends in all of these 4 charts. So really no change. It was the same kind of outlook we had last week. If we go down to a daily chart, it's pretty much the same thing. A little bit of turbulence here on the bottom right. So this is ACWX, this is international markets. You can see we had a sort of bullish outlook on this for the past 6 or 7 days until Thursday. It went neutral, which neutral to us doesn't mean sell everything immediately. It just means, well, it means neutral. It means there's some cross currents there and you want to pay some close attention, but it is still above our trend line here, and still holding neutral. So that's basically the only change. So when we look here at the S&P, you can see again, still above our smart trend filter, still printing bullish. Same thing with Russell, same thing here with the Nasdaq. All of these markets on this particular time frame on the daily chart transitioned up early last week. That is when the buy signals were produced here with this model, and that remains the outlook. So let's jump into a little bit closer analysis. Let's look at some candlestick analysis here. Let's look at our roadmap that we've been looking at for the S&P 500. This is basically where we are. We're trading at 34.83. We topped out. Our all-time high for the S&P 500 is now over a month old. So it's a month and a half old. 31 trading days ago, we topped out at an all-time high of around 35.82. So we're still underneath that. We're on the path to try and get back up there. We made some pretty significant headway last week, breaking over 3,400. That to me is still the elephant in the room in terms of the bulls really needing to hold above 3,400. That's kind of controlling what I would consider the intermediate to even longer term trend at this point. If we continue to hold above here, then I think life can be, pretty constructive and good for the bull case. If we start losing 3,400, then all bets are off, and I certainly get a lot less optimistic about this market. Now, a couple of things I want to highlight here. So first, we just looked at our trend bias here, and we essentially have alignment on the daily chart. Everything's signaling uptrend, and on the weekly chart, everything is signaling uptrend. But what I want to do is always what we like to try and do in these videos is map out all possible scenarios, or we just try and keep an open mind about what can happen here. And I do want to paint a bearish scenario that could unfold here. So if you are wanting to sell this market, if you're trying to lean to the bear side, here's the way I see that developing. Now, what we would have happen here, I think one of the worst cases we could see is that the highs that we basically made this week on Monday are all we get. So in other words, if we go to a clean board here, I don't know if I have anything clean, that should do. If we go to a clean board here, it's basically been a month and a half since we've made all-time highs. So this was the prior high. Now, if this area here turns out to be, let's even say we get back up here, even if we bounce or we rally into early next week, and let's say we even get up to 3,500 or so and right into this area. But if this ends up being the approximate high, and we essentially start rolling over here, and then we go on to break below 3,400, and then we continue to sink lower, what we have here is this, what could be a more longer term structural lower high that gets placed in here, right? So in other words, here's your all-time high. Here is the retest that basically fails and doesn't even get back up to this prior level. And then we start to roll over from here. And this puts us in a more sort of gloomy, 6-month period, so to speak, or whatever that time frame is. Again, I outline this scenario because I think it's something we can keep an open mind about. I don't consider it the high probability scenario right now for all the reasons we discussed. Trends are higher, breadth is supportive, we're above 3,400. So to me, this is still the 10 to 20% likely scenario. I don't know what the actual percentage I would come up with on it, but it's something we can at least think about and keep an open mind about. Is if we start to get a violent thrust off of this trajectory here, if we start to put in meaningful structure and roll over and never get back up to retest this high and then start losing technical prior important levels like 3,400, this is something we can keep an open mind about. So that's the way, or that's in my head the clear way from a price perspective, technical perspective, how the sellers can win out here and how the bears can sort of take control and start to dominate this market. But again, I do not think it is the higher likely scenario at this point. I think consolidation in here, putting in some type of higher low, holding 3,400, and then making another kind of attempt and leg back up here to retest and then potentially take out the all-time highs. That to me still has the credit in my book. So I'm willing to adapt. I'm willing to change as more information comes. So we'll see how this develops. But obviously, that's sort of what I'm looking at here. 3,400 on the downside, 3,580 is approximately the all-time highs there that I'd be paying attention to. We have earnings season, which we're in the midst of right now. Then we roll right into elections, and then we roll right into the end of the year holiday time. So we've got a busy, action-packed sort of next 2 months ahead of us. So it'll be very interesting to see, how those catalysts impact markets. There's obviously lots of excuses to see some crazy price action, as it's been a very crazy year. Obviously, not even speaking to the catalyst of COVID and how all of that plays out as well. So lots to chew on here. Technical roadmap, though, still I think supports the bull case, and we'll take it day by day. If we look at the Russell 2000, this here also sort of a bright spot. The fact that we took out 159 to the upside. If you recall from our last video, we talked about 159 being the place this really should hold or needs to hold to make it, kind of as healthy, as bullish as possible. You can see we gapped down here exactly almost on the dot on Thursday, right into this 159 zone, and it was basically, that was it in terms of sellers. There were no additional sellers, no motivated sellers to bring us lower. We just saw a rally into throughout the day, and then Friday wasn't anything too pretty to speak of. We sort of opened up and then sold off near the lows. So we're above 159. We've had a strong move. We're working things off right now. If this is going to continue to act well, holding 159 to me is what we need to do. Nasdaq 100 here, kind of giving some back here on Friday as well. We opened up with this gap up and proceeded to basically sell off, close at the lows of the day here. The Qs, though, are above 280. That, again, is where I am looking to see this hold to act as healthy and as bullish as possible. Same scenario that we outlined, though, in the S&P 500. If the Qs can't actually get back over 300, then, I think we have... we potentially have that more gloomy scenario that unfolds, but I don't consider it high probability at this point in time. So that is sort of the take there on the market outlook, and really, all things considered, not a big change from last week. If we get into some other markets here, we look at volatility, and specifically, if we go down to a daily chart, you can see VIX is getting back over our trend filter here. It is still printing neutral with a preceding directional bias here to the downside. So I'm still suspect of VIX, but it is just hanging around in this 25 to 30 range that it's been in. Really no change there. We've been talking a lot about that. It continues to oscillate in that zone. TLT in the bottom right, you can see has gone neutral as well. It started to pull off a little bit Friday, but it did enjoy a nice bounce today, this week. So TLT trying to stabilize and get back into bullish trend, hasn't been able to do it as of this time. If we go to commodities next, we go down to a daily chart, you can see gold and silver also neutral right now. They both printed green buy signals Monday of this week. So gold and silver both printing bullish, and then they just went neutral for the rest of the week. So they're at a pretty interesting decision point. Bulls want to see this thrust higher early next week to get that buy signal activated and moving to the upside. Same thing with oil. I've been printing a lot of scattered kind of buy signals in here. It's trying to stabilize. Been pretty volatile, and we need to see if that can actually hang in there. DBC, its close cousin there, still heavily oil related here in the commodity side of things. Sector grid, if we go down to a daily chart, there really wasn't a whole lot of changes this week either. XLRE, so real estate went neutral, financials went neutral, but that's about it. Everything else was basically persisting as it was. So a couple of the sectors I wanted to mention was XLP. So this is consumer staples, and this here is kind of flagging out, and it's it's been working again. It was kind of towards the top end of the relative strength list. It's a defensive area of the market. It's not quite back well, actually, yeah, it is back to making all-time highs. Well, not quite. This is the highs it made back here on the 2nd of September. It did take out the prior February highs. But you can see it's kind of just basing out pretty nicely here. MACD's in healthy positive territory. So XLP, consumer staples, which is the defensive area of the market, is acting well. We do, full disclosure, I always seem to forget to mention this. We've had this for so long, but we do still have a position in XLP, our Merlin trading system. In fact, this is one of our longest positions we've had. We, in fact, bought this during the meltdown here in March of this year, XLP. I forget the exact day, but we own it from somewhere in this big volatile mess. And we did sell half into this run up. We still hold half. So we are still directionally long here with an outright position in XLP, but it is acting well, kind of flagging out, and has been working right now in this recent market environment. And XLU continues to work as well. We've been talking about this now. We've been outlining, I think, this view here, this big broad consolidation that's been taking place. It essentially got to the top end of that range. It effectively is breaking out and moving sideways and now trying to resume higher again. So XLU looks like it wants to continue to trend here. It's nice and healthy. It's been nowhere for a while now, and it's working. So those are defensive areas of the market. Again, maybe that doesn't bode so well. Again, some more kind of contrarian signs, the fact that utilities, staples holding up and looking good. If we continue to see that play out, then you can draw your own conclusions from that. Last two I want to mention is just gold. Again, we touched on it in terms of being at a decision point. From our trend perspective, it's at a decision point. If we look at it from a price action perspective, it's basically, here at a decision point as well. It's what was support is now acting as resistance. Getting back over 180, getting back over 179 and change is going to be good and important here. So we'll see if that can happen for GLD. And then if we take a look at that VIX again, which we've been looking at with all different views, keep going to the mid-month. If we look at VIX here, you can see basically this range that we've been in now for all of September, month and a half or so. It's basically 25 to 30. That's where we've been oscillating around, and we're kind of right in the middle of that range here going into the weekend. So it's kind of a coin flip as to how the market mood is when we come in on Monday of next week. But until it starts breaking over 30 or below 25, then we're kind of in the same sort of volatility regime environment. Quite honestly, with all the catalysts coming up between elections and earnings season, then I don't know that we really get to see too much alleviate here, at least to the downside in terms of VIX. So that's it. I think that's everything I had for this week's analysis. As always, I'd love to know what you're looking at. What did I miss out? Is there anything else that you think is important? I'd love to hear it in the comments below of this video. And don't forget to double check your holdings and your earnings dates, because we got earnings season basically starting to ramp up. Most of the big tech names are not next week, but the week after. But there'll be some that start reporting mid next week as well. So that's it. Thanks as always for tuning in and watching. Every Friday you can catch our market analysis video just like this. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here next week.